Unbiased Reveal channel. Welcome to the deep dive. We try to make sense of the crypto madness for you. I'm Jenny.
And I'm Peter, here to add some analysis while the market, well, does its usual roller coaster thing.
Okay, so let's jump right in. Huge rebound, right? Bitcoin smashing back over $115,000.
Yeah, massive move.
So our mission today, figure out why. We've got big companies buying up Bitcoin like there's no tomorrow, plus all this chatter about a U.S.-China trade deal.
But it's not just the external stuff. There's this huge internal fight brewing over Bitcoin itself. BIP 444.
Oh, yeah. That's getting spicy. And then you have altcoins going nuts for totally opposite reasons, like fear and greed pushing prices.
Exactly. Total contradiction.
It's a lot to unpack. Before we get lost in the weeds, just a reminder, we've got the best referral link down in the description if you're looking to get started or find better tools.
Okay, so Bitcoin's comeback. Honestly, it was pretty surprising how fast it happened. We dipped near 104K.
Felt like ages ago already.
Right. And then bam, back over 115K. The whole market cap jumped, like $150 billion just over the weekend.
That's a lot of money, like GDP of a small country kind of money.
Think of the market as this super sensitive mood ring, you know? It just flashes different colors based on the global headlines.
And the main headline flashing green seems to be this U.S.-China trade stuff, the tariff dance, as you called it before.
Yeah, this whole will they, won't they on rolling back tariffs. It's been the biggest source of volatility, honestly. Off on, off, maybe on again.
It's caused some ridiculous chart patterns, too, hasn't it? That BART formation.
Oh, absolutely. For anyone listening, picture this. Price shoots straight up, trades flat for a bit, then drops straight down. Looks just like Bart Simpson's head.
Hi, yeah, it does.
And that specific pattern, driven entirely by conflicting Trump tweets about meeting Xi Jinping. It wiped out leveraged traders on both sides. Longs and shorts got liquidated.
It's absurd. You don't need Vegas when you have geopolitical tweets moving billions.
Which brings us to that golden sentence, I think. The market loves stability, but what it gets is the Trump-Xi tariff dance.
Perfect. Okay, so besides the trade drama, what else is on the macro radar? FOMC meeting this Wednesday.
Yep. But the rate hike itself, pretty much a done deal. Like 96% chance price in, no surprise there.
So what are people watching?
The future projections.
Yeah.
What the Fed signals for, say, 2026. But here's the kicker. The government shutdown means key economic data, like PCE, GDP.
Yeah.
It's all delayed.
So the Fed and the market are kind of flying blind, relying on what, older data, gut feelings?
Pretty much. They have last week's CPI, which was softer, and a historical analysis. K33 research pointed out something interesting there.
Oh, yeah. What's that?
They looked at periods where funding rates went negative for a while, like last week.
Which means lots of people were betting on the price going down, right? Paying a premium to short.
Exactly. Super bearish sentiment. And historically, after those periods, the returns 30, 90, even 180 days later tend to be positive.
Huh. So maybe history rhymes again.
Well, you know the saying. History doesn't repeat, but it does rhyme, especially when the funding rates go negative. It suggests the pessimism got overdone.
Okay, so while the politicians play ping pong with the market, the big corporations are just steadily buying Bitcoin. Like strategy. Relentless.
Absolutely. Strategy just picked up another 390 Bitcoin, spent about $43.4 million.
Wow. What's their average price now? Must be getting high.
The average for this batch was around 111K. Brings their total stash to something like 640,808 BTC. And yeah, their stock, MSTR, popped 3% on the news.
It really feels like their Bitcoin treasury idea is catching on.
Well, the sources are saying it's moving from experimental to established. And there's a key reason why that might actually be true now.
Go on.
Regulatory clarity, specifically favorable IRS guidance on something called CAMT, the Corporate Alternative Minimum Tax.
Okay, taxes, always exciting. What's the gist?
The gist is it looks like they won't have to pay taxes on their unrealized Bitcoin gains. That was a huge potential headache for any company holding crypto long term.
So holding Bitcoin on the balance sheet just got significantly less risky from a tax perspective.
Exactly. It removes a major barrier. It's not just Saylor's conviction anymore. It's the IRS basically saying, okay, this accounting treatment works. That's a big green light.
Gotcha. That makes sense. And it's not just strategy, right? American Bitcoin added more too.
Yeah, the Trump family-backed one added over 1,400 BTC, bringing their total near 3,900 BTC.
Okay, so the corporate buying is definitely a theme. What about traditional finance? Are they warming up more?
Seems like it. Look at Citi partnering with Coinbase. They want to make crypto payments easier for their big institutional clients.
So like bridging the old world and the new crypto world.
Precisely. Citi called it building a network of networks. It shows these giants aren't really debating if crypto matters anymore.
Yeah.
They're figuring out how to plug into it. It's becoming essential infrastructure.
Okay, so the money's flowing in, the institutions are building bridges, but inside Bitcoin itself, there's this, like, identity crisis brewing, this BIP 444 thing.
Yeah, it cuts right to the core. How much stuff, how much data should actually live permanently on Bitcoin's blockchain?
It's supposed to be immutable, right?
Forever.
That's the ideal. But this proposal, BIP 444, challenges that neutrality. It's driven by a developer, Luke Dash Jr., and others. They're suggesting a soft fork just for a year initially.
A fork to do what exactly? Censor stuff.
To drastically shrink the amount of arbitrary data you can attach to a transaction using something called upreturn.
How much are we talking?
They want to go from the current limit, which is pretty big at 100,000 bytes, down to just 83 bytes.
83. That's like a tweet from 2008. Why so small? What's the reasoning?
The argument, the sort of pro-argument, is about legal safety. They're worried that the current large limit allows people to embed, well, potentially illegal or universally abhorrent content. Think CSAM directly onto the blockchain.
Okay.
And since every full node stores the entire blockchain forever.
Every node operator could theoretically be liable for hosting that illegal data just by running a node. That's the fear they're raising. They see reducing the data limit as a protective measure against legal attacks on node operators.
Yikes. Okay, I can see the concern. But the backlash has been fierce, right? People calling it censorship.
Absolutely fierce. Critics like Alex Thorne from Galaxy Digital called it incredibly stupid and an attack on Bitcoin's core principles. They hate the idea of restricting what goes on-chain, calling it coercive in a network that's supposed to be based on voluntary agreement.
Didn't someone troll the proposal itself?
Yes. Peter Todd, a well-known cryptographer, actually took the entire text of the BIP 444 proposal and embedded it into a transaction that fit within the tiny 83-byte limit they're proposing.
No way. That's brilliant. Just to show how restrictive it is.
Exactly. It was a pretty effective piece of technical mockery.
So this is the really explosive part. What happens if they try to force this? What are the risks?
Well, BitMEX research put out a warning. They said trying to police the chain like this could backfire spectacularly.
How so?
It might actually incentivize bad actors to deliberately upload nasty stuff, specifically to try and force chain reorganizations or trigger instability, basically weaponizing the very thing the proposal tries to prevent.
Wow. So trying to clean it up could actually break it.
That's the risk. It really boils down to that fundamental dilemma, as you said, balancing immutability with accountability. Can Bitcoin be both a neutral, permanent ledger and somehow police its own content? Big question.
Okay, let's shift gears to altcoins, because the action there is just weirdly split right now, like completely opposite motivations driving pumps.
Yeah, it's fascinating. On one side, you have privacy coins pumping, seemingly out of fear. Zcash, ZEC is the prime example, up something like 546% in just 3 months.
546%. Why? Are they announcing some amazing new tech?
Nope. Ironically, a huge driver seems to be regulatory pressure, specifically Europe's new MiCA rules.
Wait, MiCA is the big regulation framework. Right. How does that make a privacy coin pump? I thought regulations were bad for them.
They generally are. MiCA looks set to effectively ban anonymous crypto assets, like Zcash, probably by 2027.
So people are buying it because it might get banned soon. That makes zero sense.
Welcome to crypto. The speculation is that investors are piling in for one last massive pump before exchanges are forced to delist it or trading gets restricted. It's like a going out of business sale, but for a coin.
That is dark and kind of captures crypto perfectly sometimes. So that golden sentence fits here. In crypto, sometimes the coin is pumping because it knows it's about to be regulated out of existence.
Sad but true sometimes. There are other minor factors like influencer shilling and low liquidity making easier to move the price, but the regulatory shadow is the big one.
Okay, that's the fear trade. What about the greed trade, prediction markets?
Exactly. Polymarket is the star there. Its valuation has just exploded. People are calling it one of the best examples of product market fit since stablecoins first appeared.
What's driving that? Just people betting on stuff?
Well, yes, the platform is popular, but the real frenzy, it's the token. The CEO basically confirmed a Polymarket token is coming.
Ah, the magic words. Token and airdrop.
You got it. The expectation of a potentially valuable airdrop to early users and participants is driving massive retail and even VC interest. Everyone wants free money.
So you've got Zcash potentially pumping towards oblivion and Polymarket pumping on the promise of future riches. Fear versus pure, unadulterated greed.
It's a stark contrast. And it's pulling up some older coins in related sectors too. The dino coins like Augur, REP, and Gnosis, GNO are seeing some lift from the prediction market hype. Hashtag tag outro.
Okay, what a ride this week. Let's try and boil this down. What are the key takeaways you should remember from all this?
All right, four main things jump out. First, macro stability is paradoxically the source of volatility right now. Everything hinges on this unpredictable U.S.-China tariff situation. Don't expect smooth sailing.
Got it. Second.
Corporate adoption is solidifying. Thanks to that IRS clarification on CAMT, big players like Strategy and the infrastructure being built by Citicoin base mean Bitcoin as a treasury asset is moving beyond just being an experiment. It's becoming established practice.
Okay. Third.
Bitcoin's got its own internal philosophical battle raging with BIP 444. Can it stay neutral and immutable if people start demanding controls over the data stored on it? That fight is far from over.
Right, the soul searching.
So,
And finally.
altcoins are running on fumes of fear and greed. You've got Zcash pumping, possibly because of regulation aiming to kill it, while Polymarket soars on pure airdrop speculation. Polar opposites.
And let's not forget those golden sentences. History doesn't repeat, but it does rhyme, especially when the funding rates go negative.
And the other one.
Yeah.
In crypto, sometimes the coin is pumping because it knows it's about to be regulated out of existence. Chilling, but
Yeah.
relevant.
Definitely. So looking ahead, what's the immediate question?
Well, technically speaking, there's that CME futures gap that opened over the weekend. Between roughly $111,000 and $113,500, markets often tend to fill these gaps.
The gap fill theory.
Right. So the provocative question for you is, does the market need to dip back down and close that gap first? Or does the positive momentum from the trade talk hopes just blow right past it, maybe aiming for the October high near 126K?
Technicals versus sentiment. Always the battle. Something for you all to chew on. All right, that's our deep dive for today. Remember, if you need resources, the best referral link we could find is waiting for you in the description below.
Yep, check it out. And if you got something out of this breakdown,
Please subscribe to the channel and, give this session a like so we know you're out there and we can keep making more of these. Thanks for tuning in.
see you next time.